What's going on, everybody? Welcome back to the channel. Hope everyone is having an amazing journey. Before we deep dive into the charts, though, please like, share, and subscribe as it really helps out the channel, so let's dive right in. Microsoft stock is getting hammered after hours, with the stock sliding $27 or 6.5% after reporting a miss in cloud revenue for Azure and Outlook, but reported better than expected earnings and revenue for the fiscal fourth quarter. Total revenue, though, increases by 15% from last year, so all in all, a pretty solid beat. In any case, the Microsoft weakness after hours is bleeding into the stock market in general, with most stocks down after hours, with the exception of Nvidia, which shares are seeing some reprieve after hours, with shares rising 3% after hours. But to put that into context, it did slide about 7% today, and stocks usually retrace half the gains or losses the next day or two. So although Nvidia shares are green right now, it may still drift lower before stabilizing. So you may want to temper your expectations in the short term on Nvidia and AMD as well, until the PEG ratio and fair value align at a more favorable price point. Nvidia is down 26% in 2.5 weeks, and AMD is down 39% since all-time highs, so these stocks are an official bear market, until proven otherwise. If you caught our Nvidia analysis from last week, we nailed the top, and today booked profits, puts in our trading room for $850 per contract, from $189 per contract. That was about the 9th time we got puts in the last couple weeks in Nvidia, which paid us really good. If you would like to get an email the instant we buy or sell Nvidia stock options, I'll leave a link in the description below where you can sign up for that on a secure server on Patreon. You can also join our free trading Discord too, and that would be the second link in the description below. The S&P 500 finished lower on Tuesday, closing at 542 even, which was our target. The benchmark still was only down 0.5% for the day, but still closed below the 50-day moving average, and if price doesn't want to reclaim that moving average just yet, we have the 100-period moving average at the 527 level as a solid support level. If you didn't catch our S&P 500 analysis from last week, the thumbnail said that the S&P 500 was setting a bull trap and was coming down hard. And since the S&P 500 or SPX has shaved off 150 points, with price breaking below this long-term ascending channel, you can see that price attempted to reclaim back into that rising channel, but has thus far been unable to reclaim that. We need to see the SPX reclaim the 5510 level on a closing basis for another shot at all-time highs. To put this into context, the S&P 500 is only down 4% from all-time highs, so a move down to the 100-period moving average would be a normal correction, being about 6.75%. The last correct we had back in April was only a 5.8% correction, so for now, price is holding the lower Bollinger Band at 538.50, so that's our key support level in the short term. Right now, calls above 548 and puts below 538 is how I'm playing this. But if you want to get which options we buy the moment we buy them, after I click the buy button, tap the Patreon link below to get these trades as they happen. Drop your thoughts in the comments below, and if you found this analysis helpful, please like this video and subscribe for more updates. Stay tuned, and let's make some money tomorrow.